Hey, 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 Facebook fam or Google, Gmail, not Gmail, YouTube, wherever you're coming in from. Thank you so much for joining me today. My name is Cassandra, aka the Daily Wealth Ninja, and I am on a mission to help at least 10 people become debt free by December 2019, by the end of December 2019. And the reason for this is because I hear so many stories about people who are drowning in debt or who feel like they're just living paycheck to paycheck. And I firmly believe this is not how life is supposed to be. And so I've been on a mission, it, I guess, since I made the realization that I wanted to create a lifestyle where my future children, which this is a decision I made in 7th grade, my future children wouldn't have to worry about money. And so it's kind of grown from there because I've realized that a lot of people don't know how to be investors. They don't know how to, make their money work for them. They are not introduced to information that I have actively sought for however many years it's been now. And so I want to impart to you today some information on how you can learn how to be debt free by the end of December 2019. So first of all, I wanted to share some information about this. If you're not in America, I don't know the numbers and statistics for this information, but let me go ahead and share my screen so you can see what I'm talking about here. Where is, there it is. So, share screen. Okay, let me move my face. Sorry about that. I totally forgot to do that before I came live. All right, cool. So let me go ahead and zoom in a little bit so you can see this a little bit better. Perfect. All right, so credit card debt. This is one of the things that most people seem to struggle with. And I was looking at this, and the information that I found throughout the internet has basically been about the same. The average credit card debt for a single person in America is about 7 grand, and you can see what it looks like based off of generation. It's just fascinating to me all the things you hear about all the different generations and how they do and don't deal with money. And so I wanted to find out, since there seems to be a general idea that, or this feeling that people are drowning in debt and that, they can't, they can't get out of being middle class because of everything that's going on, like, the whole 40-40-40 plan, right? I wanted to find out what was the average saving size of an American. So I looked that up, and under 35, an average savings was less than 2 grand. So if you had credit card debt, where let's say I don't know how many years it is. So let's just say Gen X was in that range. So you had 7 grand in debt, you only had a grand, maybe 1580 in savings. Savings is meant for like emergencies, right? Or depending on if you follow who is that person? He's the Secrets of the Millionaire Mind guy, T. Harv Eker. If you follow his jar system, which if you'd like more information on jar system, say jar system down below. I use it basically for every piece of money that comes into my life, and it's allowed me to create a lot of really cool memories. So again, jar system down below. So I looked at these average savings for Americans, and I found that with the average debt per American, this really wasn't a lot of money, especially if you take into consideration what's happening during those age ranges. And so I really was sitting here I don't know, just contemplating this. There was something that was going on, I guess, that I needed to speak today. And I realized that something that I have my hands on can eliminate people's debt if they're consistent with it and if they, are like really dive in. So most people, I'm sure you are aware, are sold the 40-40-40 plan. You go to school, get good grades, go to college, go into massive debt, usually, unless you're like either super smart or you're sports or whatever, right? You have your college paid for. You go down that path and then you get a job, which may or may not be in that field and is usually a lot more lower than it is for you to be able to live on your own, pay off your school debt, pay off any other increments that you might not be able to take care of, right? This is something that is prevalent for many different reasons. And so that's why I'm sharing with you today what I'm about to share with you. So one last thing though, If you've never heard of compound interest, this is something that Albert Einstein has stated, that compound interest is the eighth wonder of the world, and he who understands it earns it. He who doesn't pays it. And it's really important because most of the time when you have money, most people's investment is putting it into a bank account for savings. And that savings might be 0.01%. But what if I told you there was a system that, again, if you're consistent and you can follow instructions and you find a mentor who can guide you around the pitfalls, you have the ability to build your accounts by 1% a day, 2% a day. It really depends on your trading strategy and what you're willing to risk, because with any investment, there is some type of risk, whether it's time, money, whatever. There is some type of risk. So what I'm about to share with you today, right after this compound interest, is what I'm doing with my investments. And I'm sharing with you what I'm learning so that you can avoid those pitfalls, right? So why is it important to understand compound interest? Let's say you had $100 to invest today and daily work on growing your account by just 1% every day. Now let's say within 1 year, so a 1 year of college, I think for me was 20 grand when I first started. I think it was 1 year for 20 grand, and it totally increased by my senior year, but at least 20 grand a year for, I think mine was private college. I don't know what it is for, actually I do. I looked it up. Local state schools, I think for a year was like 7 grand, maybe less. So let's say it's just 7 grand, okay? For 7 grand for a year, if you went to college, right, you would not learn some of the things that I've been learning. So that's 7 grand. Well, if you invested in yourself, in your skill set of what I'm about to share with you, and you just are able to build your account by one small percent a day over a whole year, if you invested it, you didn't take anything out, right? You didn't take any money out to pay bills, nothing. You just for a whole year invested in yourself and your potential wealth here. And you don't include weekends, because what I'm about to share with you is only available to you like 24 hours a day, 5 days a week. All right, still amazing. So if you did that in 1 year, you would have earned almost $4,000. Now, if you look back at that average savings account, the average savings account of someone 35 to 44 is just about as much as well, it's not quite as much, about 1,000 less, but it's double what someone under 35 usually has saved up. It is a fourth of what the Generation Y would owe. It would be a half of what Gen Z would owe. But what if you had, where'd it go? There it is. What if you had $1,000 to invest? And again, I'm not saying what you should do with your money. I'm simply showing you what's possible, right? You had $1,000 to invest. If you were, amazing, and for every day for each day that you worked on this skill set, you worked on improving your accounts by 1%. Again, same time frame, same everything. You would have earned almost $40,000 in that same time frame. This is the power of compound interest. There's a story about a son and a father, or actually two sons and a father, and on his deathbed he says, if you have two choices. You can either have $1 million right now, or you can have a penny right now, and every day it'll double for you. One boy took the $1 million right then, or this gentleman, they weren't boys at the time. One man took it and the whole money and invested it and did other things, right? Trusted the stock market, trusted other people, did whatever he did with his money, right? And then the other son took the penny, and every day it compounded what he had, right? I can show you what the penny looks like here. But with 1,000. You can, in 1 year, you would pay off all of your debt according to the average American credit, right? So this is possible, and there are people doing it every single day. And if someone else can do it, you can't do it. It doesn't matter if you are like the Vic guy who was born without any arms or legs. It doesn't matter if you are homeless. It doesn't matter, it just doesn't matter, because if you can follow instructions and you will take the time to invest in yourself and invest in a skill set, you can make it work. Maybe you won't do 1% a day, maybe you do less than that a day. But if you're consistent and you have an effective, the word's not stop loss, that's just what's on my mind right now, but risk management. If you had effective risk management, then you're golden, right? So I just told you that if you had a penny a day, just for kicks and giggles, let's just say you had just a penny a day. Let's say we included weekends. Oh, that's interest. That's not the same thing. I'll have to find another way to do it because that's not going to give you the right information. Because a penny doubled every day is actually a lot of money very quickly. So anyway, so the reason I shared all this with you is because, like I said, I'm on a mission to empower 10 people to be able to eliminate their wealth. No, not their wealth. Oh my gosh, not their wealth. I take that back. That is not what I meant to say. Eliminate their debt. Eliminate their debt. Release their debt, right? By end of December 2019. So what I have to share with you is something really freaking cool. So is it this one? Hold on. I'll just put a new tab. That's fine. So if you haven't figured it out yet, maybe you've been following me for a while. I am talking about forex. Again, forex is the ability for you to invest in currency, buying and selling, exchanging of currency, kind of like stock, but you don't have to have as much to invest initially. And I hear it's more volatile, which would be true because if you see the price of stock, it's pretty steady, right? So with stocks, forex, and crypto, the things I'm about to teach you can be applied to all of the charts. The only difference is that how you put the knowledge you have together in order to determine where it's going to go. If that didn't make sense, let me know, and I will be sure to give you my free 5-day Forex bootcamp. Just say bootcamp down below. So the strategy I want to share with you today with Forex specifically is with gold and gold USD, so XAU USD. That is what's called the currency pair. So I'm here in TradingView right now, and this may look really overwhelming. And let me make sure that you can see me, or not me. You can see the thing and not me. Okay, good. And actually, now that I think about it, I hope I haven't been talking and without making sound. So while that's loading, this may look overwhelming. Just take a breath. How'd you feel better? I know I always do. So this may look overwhelming. Chill. I'll explain this all right now. Or actually right after I make sure you can hear me. Perfect. Okay. So what you're looking at right now is called a chart, a price chart. This is the gold US dollar currency pair on the 1 hour view. Let me go ahead and turn that on so I can zoom in on things. All right. So I covered this in my 5-day bootcamp, but I want to make sure that this is very clear what's happening right now. So this is the currency pair that I'm on, gold US dollar, which is XAU USD. I'm on the 1 hour, there we go, the 1 hour chart. And everything that you see here is just a piece of that chart. So this right here, so you see where that dot is, and this line right here, this is part of what's called a Fibonacci tool. Now, if you don't know what that is, Fibonacci is just basically everywhere. Go ahead and look it up because it's pretty freaking cool. Hey, Keola, Rachel, Rachel, Cassandra, thanks so much for joining me. So this is the Fibonacci tool, and it can be used in many different ways. But in where I have it right now, you can see that this gray part right here goes all the way and hits the bottom of this wick. Now, what does that mean? This long wick means that the price is having an issue trying to break through that barrier, okay? So This is basically a lot of math happening right now that you don't have to worry about. It's done for you, and it tells you, hey, because of the way that I have this Fibonacci going right now, right, that this is 61. Oh, I don't know what just happened. Let's try that again. 61.8%. So this is one of the magic pieces of Fibonacci. I'm not going to go into all that right now. Let's just say that this is really, really good to know. So when I drew this initially, I think I was actually about somewhere around here, and I had drawn this channel. No, it must have been later when I drew the channel. But I knew that when you're trading, if you have a high here and a low. Now, what does that mean? A low basically means that there's been a change in the direction from either a downtrend to an uptrend or an uptrend to a downtrend, right? That's just a change, a pivot, whatever. So when you have a pivot and you have support or resistance, depending on which direction it is, so in this case, this one is support, then you can take this tool and it's a safe assumption that the price is going to go back up, usually to about 0.618. That's like expected. It's okay if it goes to 0.5. I've been told it should at least go to the 38.2%. I've heard that this part, if it comes in between here, then it is a strong buy or sell, depending on what's going on. This is normal, and this is weak. All right. So just for those who may be already be trading. So I made this Fibonacci tool so that I could see how far it would go back, so I could plan my what's called a stop loss appropriately, plus including my account size, right? So excuse me. So this was expected. It didn't go that way. In fact, it kind of created a box right here, and it went into a continuation phase, and it broke out right here. And as you can see, it actually hit what's called my take profit. Now, what does that mean? Can you, okay, cool. Let me get this up. So again, past results, not typical. My results and what I'm sharing today do not guarantee nor dictate your future results or your future success. Your outcome and your investment is dependent upon your actions and what you learn and whose advice you take. So I'm simply sharing with you what's possible and what's happened to me in the last day or so. So I'm on my MetaTrader 4 app. This is actually my demo account because I'm testing out some strategies. And right now, right here, so this button right here, this is what's called your MT4 trading app. This button right here tells you what trades you're currently in. And so right now, anything that's blue means that I'm winning that trade, and that's how much money I'm about to make from that if I were to close out of these trades right now. These, the ones that are in red, means I'm losing them, which means that it's not going in the direction I thought it was going to go in. And in fact, these two were a mistake. And I'm going to explain that to you today and why it was a mistake. This one, I don't remember. Honestly, I think that was a call from, yeah. So that was a call from one of the tools that I am using to help pull my trades, which it doesn't mean that it's going to keep going wrong, because usually it does fluctuate, but once it goes, man, it just goes and it's awesome. So this is what it currently looks like for the trades that I've taken based off of what I've been learning since about June of this year, which is 2018. And then here is the last, let's just look at today. So today I've won 2 trades. This one I won based off of a call from a tool that I'm using on the 1-hour chart, and I won $6.42 in quote unquote monopoly money, aka play money, aka demo, because it's not my actual real account. So this one was part of a call from one of the educators that I follow. He gave a trade suggestion based off of what he was looking at, and so I decided to invest my monopoly money in on that, and it was actually winning, but he made an update to his call and said, hey, here's what I see. If I were in, I would close out half of my trades and raise my stop loss, because here's the thing. When you're in blue, depending on how many pips, which if you're not sure what a pip is, I have that in my 5-day boot camp. Just say 5-day boot camp down below and I'll get that to you. So the pips, depending on how many number of pips you're up in the direction that you chose, it is wise to move your stop loss to break even +2, according to Lee Allen. Thank you, my friend, to make sure that you not only don't lose, but you also at least get slightly ahead. Because as you can see right here, the brokers do take commission, right? So one of the reasons why I do the trades that I do in my demo first is to, one, see if the trades that I'm about to use are good trades, right? Because we all like good trades. And two, how much are they going to actually charge me depending on what I'm earning on this, right? So for this lot size, which if this were worth, let's say $10 per pip, this means that I'm actually earning a penny per pip. So from here to here, that's about 31 pips that I earned on this one. And so it's basically almost 10 cents per pip. That's what that looks like. That can't be right. No, that's totally right. That's totally right. So you would be earning 10 cents per pip on a micro lot, which is what this is right here. Okay. So those were the 2 trades that I took, or rather that closed today in profit. But it's not all, winnings, right? So 1, 2, 3, 4, 5, 6, 7, 8 trades in a row. I won, right? It went in the direction that I made an educated guess about, and one of them was $32.35, and that was made in less than a day. Yeah, I think that was made in, oh, it's hard to tell because that happened over a weekend. But I mean, $32 where all I did was do a little bit of charting and then make a trade, and then, ooh, look, it went in my favor, and oh wow, it went up a couple hundred pips. Pretty sweet, right? And so this one was based off of something that I did. I don't remember which video that was on. So be sure to like and follow this. If you're on Facebook, be sure that you're tapping on the live and you're notified of when they go live. If you're on YouTube, be sure to tap on the button. I'm not sure if it's somewhere where it'll be, so click on that and be sure to subscribe. So this is what's possible, right? Even if you only do a micro lot, 0.01, you have the ability to earn $3, $6, $40 in a very small amount of time. Now again, results not typical, past results not dictate nor guarantee your future success. I'm just sharing with you what's possible and why I'm on a mission to empower 10 people to be debt-free by the end of December of 2019, because it's possible, especially, is it here? No. Where is it? Well, you already saw it, right? Especially because there are the average debt. There we go. Average debt is, just a few $1,000s. So let's go ahead and go to the implementation phase of today's video. So one of the things that that I learned recently from a fellow female educator in the forex space, she's on my team. Her name is Fallon. Thank you, girl. She got this from another leader on our team, Brandon Hodge. Seriously, I was a little skeptical at first, but that's when I realized, or reminded myself, that investment is risky, right? You just have to keep doing it, and you have to build your RAS, or your reticular activation system, right? Thank you, Steve Greger, for that one. So here's what's happened, or what the process is, and I'll show you what happened yesterday. Oop. So I talked to you about this and why I did that. Now, if you flip this, which is the Fibonacci retracement here, right? This part right here, the Fibo tool, right? Or it's 61.8%. But it never did that. It actually broke through the box, right? And it hit my take profit, which that's where this green was. And that's what I showed you earlier on my MT4 app. So how did I know how to put that on this chart? Here's how. First step is you got to be on the XAU USD chart on the 1 hour. You also have to make sure you're on the Heiken Ashi candlesticks, because right now this is actually not what the candlesticks look like. If you looked at a regular chart, this is what they'd look like. The colors changed, right? And if you're red, green colorblind, I apologize. I'm not. I hope you can see the difference here. But if you can't, please let me know, and I'll be sure to change my candlesticks in the future. So, so I went through, I did some charting about using support and resistance and trend channels, which I go over in my bootcamp. Say bootcamp down below if you like it. So I did all my charting, and then I added a vertical line. So I have them on my favorites bar, but you would bring it over, or you would choose it from here. So bring up your vertical line, and it has to go on the midnight candlestick, which is what these are, Japanese candlesticks. It has to go on the midnight candlestick. Oh, this is the wrong time. Hold on. So you also have to make sure that you update the time zone. So I am in the Central Standard Time Zone, so I don't need, but I prefer it to be on my time zone. So that way when I take trades and I, don't immediately write them down, I can at least put them in here really fast and be sure to have them be there when I'm actually writing it down in my trade journal. So that needs to change to, I think it's the exchange one. Exchange. I think Exchange and UTC are the same, but I chose Exchange. And so from here, you can see that there's this blue bar, right? Right here, this thick bar right here, right? It looks like kind of like periwinkle actually, but there's that bar. If you look down at the bottom, so if you look down at the bottom, which I'm zooming in for you, it shows that it's on the midnight candlestick, 0000, right? Military time, 00 midnight, of the 29th of October, which was yesterday. So we're going to add that same vertical to today, right there. And we're going to lock it. And the reason why we're locking it using that little lock icon is because there's going to be plenty of times where you don't click this icon and you're going to be so mad because you move something accidentally and it screws it up and you don't remember where it was before. Or you do something silly and remove all drawing objects that aren't locked, and then you lose all the work that you spent however long on, right? So you want to make sure you lock it. Now, what's the next step? Next step is to look at the candle as to where it closed after that. So it does show that it closed below the other candle, and oh wait, no, we're not Hakanashi. Okay, there we go. So like I said, it has to be on the XAU USD chart, 1 hour. You have to have the Heiken Ashi candles, not the regular Japanese candlesticks. And you can see what's happening. So you can tell that this is currently in a downtrend. That's why they're red, right? I chose red for sells and greens for buys. So this candle closed as a buy. The next candle closed not only as a sell, but also closed below the other candle. And so this is a trend that is going down, right? Currently, there's no indication that it's going to go back up. However, just like with all trading, it just went through what's called a support and resistance line right here. So well, not only is it there, but it's also hitting here. So what do I mean by that? I'm going to show you, because I know that's kind of hard to see. It's very small. It's kind of a light color. So this line right here, this purple dashed line, I think it's actually violet. This was a weekly support and resistance line. That's basically a price level that the candles have a problem breaking through. All right. So this is a weekly support and resistance line. We see that it's having some issues getting through it, right? It's staying kind of here. It's kind of doing this zigzag line. And here, this wick breaks out, right? Oh, I didn't mean to do that. So we see that it actually comes below the line that, there we go, that I expected it to, or rather that I got into the trade at. So sometime in this hour candle is when I got into this trade because is it this one? Yes. Because if you notice, okay, hello. Uh-oh. Oh no. Ah, can't be perfect, right? All right, so this right here, is this gonna let me? Is it done? No. Oh, there we go. Okay. I swear I did that already. So this right here, this box, right, this red and green box, this was the very first one that I put in. So before I went to bed last night, I put in a trade for this gold USD, and it went exactly where I thought it would, and it hit my take profit, and it hit the second one. I had actually wanted to put in another trade, but because I was going to sleep, I wouldn't be able to follow it, and it might go back all the way up here before I even wake up. It's happened before, which is why I doubted this strategy. But again, investments can be risky. Please speak with a licensed financial advisor before taking my advice. So it hit my take profit, but it actually stayed around here. And as you can see, this green dashed line right here, you might not be able to see that. So there's a green dashed line right here. And you can see that the price kind of stays around it. It might go down a bit like it does here, but it basically stays around that line. So that's why I chose that as my take profit from where I got in, because it was already at this one was a green one, so it was my hourly support and resistance line. So I wanted to have a second one that went down to here because this one was the weekly one, like I was just saying. So when I saw that it was still going down, right, I was like, well, I think it was about here. Yeah, well, obviously, because I got in there. So let me just erase that. So it was about here, somewhere in this candlestick, that I made the decision to get in. Again, I should have waited. I let my impatience get the better of me. That's kind of what happens with investing, right? You have to do your best to get your emotions out of it. And so I got in, which wasn't necessarily a bad thing, except when I got in, as you can see, it was, I guess it started up here. I'm not quite sure how that works out. Oh, that's because it's Heikinashi. Anyway, somewhere in this candle, about here, is when I got in, and you see that the downtrend, you know what, let's do that, because now I'm curious. Okay, yeah. So you can see from here that I got in at this point right here, right there. And since it wicked, that means that at some point, let's see, it started out here, it ended here. This is the low, that top of the wick is the high, right? I got in right there, right there. That's not where you want to get in. That's not where you want to get in. You want to get in closer to up here. But again, I was impatient. And so I'm sharing this with you so you can kind of avoid some of these pitfalls, right? That's what mentors and trainers do. So I got in and it went all the way back up here, and as you can see, it bought again and sold again and all that good stuff. So I should have waited. I didn't. But if you look at the Heikinashi, it's still going in my favor, right? So it's going in my favor. So I'm going to actually keep this trade, but I'm going to review what I thought it would go to. So this looks pretty deep. So the reason I say that is because right now when I got in, this was actually let's see. So this first one, oops, no, not that one. Oh, I hate that it does that. Hold on. I have to send that to back. Send backward. Okay. So I have one trade. There we go. I have one trade that is a 1-to-1 risk ratio, which really isn't the best, but that means I'm risking 1-to-1. So if I'm risking $1, I'm actually going to gain $1, right? So this one right here is a 2-to-1 risk ratio. So I'm risking $1, but I'm expecting to get 2 back. Well, the way that it's looking right now at the Heikin-Ashi, this is actually looking like consolidation for me with this particular view. If you go back to what the candles actually look like, it looks like it's in a downtrend. So as I said earlier, it opened into this box, and it still looks like it's in the box, right? So we don't quite know when it's going to get out of this consolidation phase. So I'm going to bring this over here and just kind of leave that as is, right? Actually, that can even be made smaller. Can anyone tell me why? And I'll go ahead and look back at the live here to make sure there's no questions. Hey, Stacy, thanks for joining me today. Glad that's been helpful. Appreciate it. So what I'm going to be doing is moving the box down to, if you can see it, where that Fibonacci was before, right? The gray line. And so that's actually going to be the start of my box because it's about where I have my stop loss. So there's not really a science to this part. This is kind of where your education comes into play. So it's entered my box, and it bounces off the box, it bounces off the box, it's going through here, and this is in a consolidation phase. So right now, it looks like it's still following a downward trend. So if we scoop back just a bit, so I'm actually going to show you something here, or something else here. So I'm going to click on my Fibonacci again. Now, right now, if you go to Style and click Reverse, the numbers reverse. So we're expecting it to go down, right? So if it's going down, starting up from here, 23.6, 38.2, 5, 618, right? You can start to predict where price is going to go. If you look, right? Look at this. So that box we just drew is that yellow box. This thing right here. 1.618. That's an extension of the Fibonacci tool. This wick went a little bit past it and hit that box. Pretty cool stuff, right? So I was able to predict that it was going to go down to that point, at least right there. And it might go further. It might break out of this box. So it might, do this thing and then come out of this box and then like just go down to Kingdom Come, right? It's possible. Or it might just keep going this way for a while. Or it could break out of this box, do a retest, and then come back. You always want to make sure you go for the retest. Sometimes it might not, right? And just keep going like right here. But that's what, again, your training comes into play. So all of that is possible. So you have to, first of all, kind of let this ride, because right now this is a pretty clear box, a way for you to see that you're inside. Now this, like I said before, let me go ahead and close that off. Thank you, Shane. I appreciate that. So let me go ahead and zoom in. Whoop, there we go. All right. So it's still in kind of like a downward trend right here. So if you were to take a parallel trend channel, make sure your magnet is on so it clips to the wicks. you can take that top pivot, right? And I'll show you what that was in a second. I know I missed that. Try and get as many wicks as possible when you create this line, and then bring it down so that it gets as many pieces as possible, right? So I'm going to leave it here because this looks more like a fake out. So why did I do this? I'm currently on the 1 hour. That's why I'm leaving it at green. It is in a downtrend right now inside of the consolidation phase. So a lot of traders say don't trade in consolidation phase. I would say that as well, but right now this is helping me to determine where my trade is likely to go next, because when it's in consolidation, it's a free-for-all, right? And I'm about to go to bed. So it's currently in a miniature downtrend. It looks like it's still got a ways to go, so it could still hit my one of my first take profits. But if it does, it's actually going to mean that it breaks out of that box. So from here, let's see, there's that. All right, so let's go back to the Heikin-Ashi. So we can see, right, that it's still, that also the Heikin-Ashi is following that downtrend. Now, what is a Heikin-Ashi? Go Google that one. I don't have a training for it yet. But basically, it's some math that's done with previous candles and all that. So yeah, it helps you know if you're in an uptrend or a downtrend. It's basically the, what's it called? Layman's terms? I think that's the phrase I'm looking for. So yeah, it tells you if you're in an uptrend or downtrend. And right now we're in a downtrend. Yay! This is awesome because that's exactly what I was expecting it to do. But obviously it can change in like that, right? So that's basically it, right? I do my charting. I look to see if it's in the downtrend. I put that line on the midnight bar. I check to make sure what the next one is going to be. And then I set my take profits and stop losses based off of those support and resistance, as well as making sure I'm following proper risk management. Now, right now, I am in a demo account, so I'm being a little bit more risky than I probably would if it were my own money. But I'm also doing it to see what everything does, because I noticed that when I got too in the mindset of lack of losing my money, which was monopoly money, so it sounds ridiculous, but when you trade, you'll understand what I'm talking about. Hey, Mason, thanks for joining. So, lost my train of thought. Oh well. Basically, like I said, you just look to see if it's if the candle closed below it or above it, and that will help you determine the direction it's going to go. Make sure your take profit is the next support resistance line closest to it. I chose this one a little bit lower, mostly because the stop loss was so high. So I wanted to make sure that I had a proper risk management. Plus, there were lots of signs that it was going to go there anyway. So, and then your stop loss again is also the other direction's support resistance. So let me know if you have any questions. I have a free Facebook group, so let me know if you want to join that. My 5-day boot camp, let me know. I got so much stuff. I just want to make sure you have it at your fingertips because seriously, about 20 years ago, this was not available to you and me. This is only for bankers. This is only for people with a lot of money. And now that it's available to people like you and me, we need to spread this knowledge so that people can, you know, pay for their kids' college or have their kids pay for their own college, because this is something that you can start learning as a kid and use it to supplement income, you know, when you're going to school, or maybe even pay for your school and, you know, whatever, right? It's possible. People are doing it no, I'm just kidding. People are doing it every day. But past results don't guarantee nor dictate your success. It's all dependent upon your investment in yourself, making sure you know what you're doing, making sure that you are implementing it, because if you just learn, knowledge is not power. Knowledge is potential power, and action is what gets you the results that you're looking for, and thus the power you seek. So thank you so much for joining me today. My name is Cassandra, aka the Daily Wealth Ninja, and I was sharing with you today information on how you can get to be debt-free by end of December 2019. This is just one way. There are so many. I mean, Danny Johnson's War on Debt, you know, if you start your own business, so many different things, right? So yeah, I guess I will talk to you on the next one. Hey, Ethan, thanks so much for joining. Just hopping off. All right, have a wonderful and prosperous rest of your day. I will see you in the next one. Bye.